Let's dive right in. Today, we're going to break down one of the smartest ways to build your wealth: mutual funds. And if you've ever thought that investing was just way too complicated or way too expensive, well, this one's for you.
So, first things first, let's just bust a huge myth right now. Do you have this idea in your head that you need a massive pile of cash just to get in the game? If you do, you're not alone. It's probably the number one thing that holds most people back. And look, if any of these sound familiar, you're in good company. The feeling that you need a small fortune to even start, the fear of losing it all, the sense that it's all just too complicated. It's overwhelming. And it usually leads to that one big question: where do I even begin? Well, that is the exact question we're going to answer right now. Stick with me because in the next few minutes, you're going to see how to jump over these hurdles and start investing with confidence, even if you don't have a ton of cash. So, what's the secret weapon here? It's something called a mutual fund. And the whole idea behind it is super simple. There's strength in numbers. Okay, so what is a mutual fund really? The easiest way to think about it is like a giant potluck for investing. You, me, thousands of other people, we all chip in a little bit of money into one big pot. And all of a sudden, that one big pot has some serious financial muscle. And how it works? Honestly, it's way simpler than you think. Step one, you and a bunch of other folks pool your cash together. Step two, a professional fund manager, this is their full-time job, takes all that money and invests it for everyone. And boom, step three, you now own a tiny piece of everything in that portfolio. Not just one company, but a whole bunch of them. But of course, it's not a one-size-fits-all deal. Just like ice cream, mutual funds come in different flavors, and you've got to find the one that's right for your goals. All right, let's look at the two big ones you'll see everywhere. First up, you've got equity funds. These guys are all about buying stocks. You can think of these as the growth engine for your money. They've got higher potential for big returns, but yeah, they also come with more risk. Then you have bond funds. They invest in debt, which is all about creating a steady stream of income. They're much more focused on consistency and lower risk. So what if you're not just chasing growth and you're not just after income? Well, if your number one goal is just keeping your money super safe, you'll want to look at money market funds. They invest in really safe short-term stuff, super low risk. And hey, what if you want a little bit of everything? That's where hybrid funds come in. They mix stocks and bonds together, trying to give you a nice balance of both growth and income. Okay, so mutual funds are sounding pretty awesome, right? But let's be real, every single investment out there has its upsides and its downsides. So to really get it, we need to look at both. You know those hurdles we talked about at the beginning? Well, the benefits of mutual funds tackle them head on. First, you get instant diversification. With just one purchase, your money is spread out across tons of different investments, so you're not putting all your eggs in one basket. You also get a pro managing your money for you. And they're liquid, which is just a fancy way of saying it's easy to get your money out when you need it. And maybe the best part, they are so affordable. Just how affordable are we talking? Forget about needing thousands of dollars to get started. A lot of these funds will let you set up a monthly plan for as little as $100. That huge wall that says you need lots of money to start? Yeah, mutual funds just knock it right down. Okay, but let's get real for a second. No investment is a sure thing, and that includes mutual funds. There are risks. So what are the things you really need to keep an eye on? First off, there's what's called market risk. It's simple. The whole market can go up or down, and your fund will probably move with it. Next, if your fund is investing in other countries, you've got currency risk. Changes in exchange rates can affect your bottom line. And lastly, there's a small risk called liquidity risk. It's the chance the fund manager can't sell something fast enough to avoid a loss. It's just good to know these things are part of the game. So at this point, you might be thinking, okay, this is cool, but why wouldn't I just buy a few shares of a company I love, like Apple or something? And that's a totally fair question. So let's do a little showdown. Mutual fund versus a single stock. And when you put them side by side, the difference is, well, it's huge. With a mutual fund, you own a piece of many companies. So if one has a bad year, it doesn't sink your whole portfolio. With a single stock, it's all or nothing. Plus, the fund has a pro at the wheel. When you buy a stock, you're the manager. It all boils down to this. In a fund, your risk is spread out nice and thin. In a stock, it's super concentrated. Phew, okay, we've covered a lot of ground here. We've talked about what mutual funds are, all the different flavors they come in, and the pros and cons. So let's pull it all together and talk about what this means for you and your next step. So if you remember just 3 things from all this, make it these. Number 1, mutual funds are your shortcut to instant diversification.
Number 2, they basically unlock professional-grade investing for everyday people. And number 3, and this is the big one, they prove you don't need to be rich to start building wealth. You can start small and let it grow.
All right, you've got the basics down now. The question is no longer if you can invest. It's what are you going to invest for? So I want you to think about this. What's that one big financial goal you want to start chipping away at? Is it retirement, buying a house? Whatever it is, you now know that the journey can literally start today. Thanks for watching.
Don't forget to subscribe to the channel, like the video, and click on the bell icon to turn on notifications.